Do it now.
Okay, and now I'm recording.
Hello, everybody, and welcome to this great event. So glad you could be here, and so glad I could be here with you. Today, we're going to talk about simple timing tools for finding big move trades. Now, if you read between the lines, I am an Elliott Wave person. You may not know that. I have studied Elliott since I traded for JP Morgan in the 1980s. So these timing tools are Elliott Wave based. That's what they are. So what we have done is we have automated Elliott Wave into creating unbelievable timing tools. So I'm going to show you all that today. And the without risking your capital is because we also have a funded program, a fully funded program, and I'm going to share that with you at the end when I tell you how you can join the Wavy Tunnel Pro, which is our program, which I am going to be starting September 18th with live coaching sessions. So here's the disclaimer. Please read it to yourselves. Today, we are going to learn how to locate and trade with confidence large swing trades. And really, they're the end of trend trades using a simple tool and using our scanner tool. So we're going to talk about how to get out near the top when others are buying, get in when others are selling. And I'm going to do that by showing you a framework, the context of the 8-wave market cycle, showing you how the market cycles play out in any time frame, with any market. So whether you trade stocks, stock indices, futures, like Anka does, and she does it brilliantly, or Forex, it really doesn't matter what you trade or what time frames you trade. You can be a day trader trading off of the 1 or 5 minute chart. You can be a swing trader trading off of the daily and the 4 hour and the hourly. You can be a position taker. And that's what it means when you hear the markets are fractal, meaning the patterns repeat themselves over and over again in all different time frames and all different markets. In fact, when I was at the bank, we would trade whatever could be, plotted, and that was back in the 80s. And we actually collected our own data, and really, that's all you need to be able to find the market cycles. Then at the end, I'm going to show you how you can join the Wavy Tunnel Pro and get funded. So this is me. I wrote the book, The Trader's Pendulum, The 10 Habits of Highly Successful Traders. And really what this book is, it was the compilation of my life's trading work, my life's trading. I mean, I started actually in 1980 trading the British pound. I traded the British pound from the 240 level down to 105, back up to the 150s. Then I was promoted. I was the assistant chief dealer, and that was on the Forex desk at JP Morgan. And we hired an Elliott Wave technician off of the exchange, the Chicago Board of Trade, who worked with us day in, day out, taught us Elliott Wave. That's how I was introduced to Elliott Wave analysis and pivot point analysis and all kind technical analysis, all kinds of neat things that I learned from this guy who is now still the analyst for all of the major institutional hedge funds out there, and who still use his help because he is excellent. So I learned from the best, and that's what I do today, and that's what I'm going to hopefully impart some of that knowledge onto you today. Now, in the book, I talk about the market pendulum, the financial pendulum, the emotional pendulum. And I'm going to show you a chart next, which incorporates all three in one chart. So the market pendulum is about the market cycles, buying in the trend and then waiting for the correction and waiting for the next move to start. So that's the market pendulum, the ups and downs in the market. The emotional pendulum is what happens when we have like huge volatility, which we've experienced over the last many months, and it can be quite crippling sometimes. I don't know if any of you have experienced that, but you really have. It's really when we are in the emotional pendulum, we're swinging back and forth between fear and greed, and the ideal place to be is somewhere in the middle so that we don't experience the extreme emotions of fear so that we're afraid to pull the trigger, or greed so we're trigger happy and we pull it too much and we give back all of our profits, our hard earned profits. How many of you have experienced trading day in and day out, making really hard earned profits only to give it back at the end of the week? Can I see a yes if you've experienced that? Because if you haven't experienced that, then you really, you don't have the experience yet, and you will experience that. So I'm seeing yes, yes, yes. Hi, Randy. And that's the emotional pendulum. The financial pendulum is making and losing money. Not all successful traders have 100% wins. The most important thing in trading is to manage the risk. And sometimes I don't even do it that well. I get more on the greedy end. I've got it, I'll come clean. And the financial pendulum is really having a using proper risk management. And I can't stress that enough. You want to limit your losses and maximize your gains. So if you can show with your trading system that you keep your losses small and you keep your wins bigger than your losses, you're going to make money. And that's how you have to do the funding program as well. So let me get to the chart and show you this chart. This is the 8-wave market cycle. The trend is the 5 waves moving up. So the trend waves are the waves 1, 3, 5. And then on the correction, the ABC, you have 2 trend waves there as well, the A and the C. And the corrective waves are the waves 2, 4, and B. Those are the corrective waves. That's where you would use your Fibonacci tool, which you did hear about today, to see what the possible retracement could be. And when you do use the Fibonacci tool, I'll show you the strategy that I use. But you want to you want to also draw your channel lines, because all Elliott wave sequences typically fall within channel lines. So if you have a wave 1 and a wave 2 and you're looking for the wave 3, the wave 3 is usually the strongest move, and it's the move where you can throw a dart and make money because it just keeps on going up. And nowadays we're in a downtrend, so we would have to turn this around because this is for an uptrend. But then when we move down for the wave 4, you want to see the wave 4 falling within those channel lines at an appropriate Fibonacci level. And there are other things as well to note about that. So the market cycles, the market pendulum is the trends and the corrections, the trends and the corrections, the trend, the correction, and the trend. The fear and greed is what you do when you have FOMO. The greed is when you load up at the top of the market. You have FOMO, fear of missing out. You're optimistic, you're exuberant. Everybody's buying, and you lose sight of the fact that the markets don't continuously move up in one straight line. In fact, they never do, although sometimes they seem like they do. And then you get caught up in the whole emotional frenzy and you buy at the top, which is point T, the termination point. And then the market sells off. And at this point, at point A, we have a nice trend moving down. We're thinking, okay, this is the bottom. The institutions are going to be buying here. I'm going to be buying here. The market moves up and you buy more here. And that is your wave B that then turns into a wave C, which is a continuation of the wave A, the downtrend. So this is the bull trap, the wave B bull trap it's called. And let me give you a little hint. All corrections move in 3 waves. So A, B, C, A, B, C, A, B, C. When you see a three-wave move in the market, and we're going to look at plenty of examples, so I'll show you what I mean. If we don't make a 4 and a 5, that means that we are going to turn around and move down again. In the case of this A, three-wave up for a B and down for the C. But when we have the wave C end, and this is the trade that I'm going to show you today, and this is the trade that one of the trades that we've programmed, and it's just really unbelievable. This is when fear sets in, and the market players are panicked, discouraged, and they bail. They bail at the bottom, and this is when we need to be buying. And this is what our scanner shows us. It shows all of the stocks. I'm going to show you a stock scanner and a Forex scanner, but I'm talking about stocks right now. This is called our breakout 4 trade, and this is where we want to be buying. And let's get to it. So we already said that we want to take profits up here and we want to buy down here. Now, Warren Buffett is a contrarian, and he says, be fearful when others are greedy, be greedy when others are fearful. And that's exactly what we are attempting to do in our system, to be greedy when others are fearful down here. So this is important for you to know because the market is really complex. It's more volatile. Emotions are the Achilles heel for traders. You need a system that removes the emotions. You need to filter out the bad trades. If you're planning to follow trade recommendations, you need a foundation first. Please don't just follow somebody else's trade recommendations unless you know what they're doing and you can do it yourself and you know how to manage the trade. You know how to manage, or else you will not get the same results as that recommendation. You just will not. Your capital is likely limited. If you blow up your account, you might not get a second chance. Just a few tips. Being organized can help you take your trading to the next level. Do you have a checklist for high probability trades? Once in a trade, do you manage it well? Do you take losses and move on, or do you add to losing positions? Do you keep track of your trades? Do you learn from your mistakes, or do you do the same things over and over expecting different results? So this is really important. You want to take a screenshot of this. It's really important. And everything that I'm teaching you today or telling you today, I've experienced myself I've experienced myself. So let's get to it. What process do I follow to find trades, have the confidence to pull the trigger and manage my trades with clarity? And this is my system. So the market map, the analysis, this is the market context. Yes, you need to have the market context. Is the market in an uptrend? Is it in a downtrend? What is the trend? Or is it a sideways market? So this is what the market map tells us. And you will hear some Elliott Wave analysts who provide their market map. And that's what I like to do. I do like to look at, we have our own analyst actually, and I'm going to be bringing him on Thursday at 11 o'clock. Juan, he provides analysis on many stocks, all the major Forex pairs, bonds, the stock indices. So he's coming on Thursday at 11 o'clock. You may want to mark it down. And also tomorrow at 11 o'clock, I'm bringing Stephen on, who created his own wave counting software, which is out in the market now. And it's just amazing. So I wanted to introduce him to you because for me, the context is really important. And that's what the waves are showing. And you don't need to be a consummate Elliott Wave counter yourself. You do need to understand some of the basics. And in fact, the Wavy Tunnel Pro, when I teach that, the tagline is count the waves without really counting the waves. In other words, I can look at the Wavy Tunnel and tell you pretty well what wave we're in, or if we're in a correction, if we're in a trend, and I can't tell you what the wave count is unless I sit down and do it, which I'm not inclined to do. So my market map is the Wavy Tunnel Pro, and also following an analyst's view. And if you like that analyst and can relate to what they've been saying, if they're right most of the time, that's a good place to start. You don't have to be the analyst yourself. Then the next step is the strategy. So even if you have an analyst by your side, you need to have a strategy, and it can be a very simple strategy. Very, very simple. You need to know which way you are going to be entering the trade, and have a strategy to enter that trade. And a strategy, and part of the strategy is where you get out, where you take your profits, and where you get out. And that moves into 3, trade management and optimal risk reward. When you're establishing your position, it's really important to understand your risk and to get out when at your stop loss, because there's always another trade. Sometimes I don't do that so readily. I don't get out of my trade so readily, and then I kick myself afterwards. There's always another setup. There's always another trade. So it's really important to understand that, because if you don't get out of your losing trades and you let them run a little bit too long, that's going to wipe out the profits, the rewards. Trade management is about where you take your where you exit your trade, where you take your profits. So putting this all together, you have that's my system. It's a system for any trader to follow. So the 8-wave market cycle works for uptrends and downtrends. So just take note, because I'm going to introduce the setup which showed up on our scanner on all of the weekly charts. Yes, all of the weekly charts over here for buys. And then the weekly price action started to move up. And usually I run the daily scanner, and you can also run the hourly scan. You can run the scanner on any time frame. Usually I run the daily, and I didn't find any trades for buys, because I just didn't, because we were moving down. And suddenly I looked at the weekly scanner, and I found all of these scans to stocks to buy on the weeklies. But then I continued to run the daily scanner, and oh my gosh, I'm going to show it to you. At this point here, I saw all of these sells. So that would have been like a small move up on a weekly, and on the daily, I would see the trigger for the sell. Remember, I told you that you have a strong trend move down, and then you have the ABC, and this is where you would sell. You have a strong trend up, and you have the ABC, and this is where you would buy. So just picture this. You have your buys on the weekly, and then the dailies tell you, get out of your trade now. That's how I used it. Just incredible. And even go short. So I can't wait to show you that in a minute. So this is the Wavy Tunnel Pro setup. Just a bunch of moving averages. Now, you know that most traders use short-term and long-term averages. You've seen some today. The popular ones are the 100, the 50, the 100, the 200, and then some of the shorter-term moving averages. I like to use Fibonacci averages. So these are Fibonacci averages. The wave, these pink, this is the 34, and this is the 12, and this is the 12 EMA, and then this is the tunnel. So now you might say, well, 12 isn't a Fibonacci moving average. It's actually the square root of 144, which is part of the Fibonacci, which is a Fibonacci number. So that's why I use the 12. So when price is above this wave and the wave is above the tunnel, we're in an uptrend. As soon as the market starts to break down, we move down to the wave. We have this wave B, which this is a sideways market. So it's a sideways correction. In Elliott Wave, you can have different types of corrections. This is called a flat correction, a sideways. It's like a rectangle. And then we have a dramatic move down for a wave C. And notice how price breaks below the wave and moves into this gap between the wave and the tunnel, and usually price moves beyond this tunnel, and that's where our scanner picks up the trade. So one of our targets might be the tunnel, and then if we're short, and then we're going to be looking for the long trade. And it's all set up mathematically. I'll show you that. Let me just tell you one other thing. When I said that I count the waves without really counting the waves, when you put the awesome oscillator on the chart and you have a peak in the awesome oscillator, I usually label that a wave 3. And then when you have a higher high and a lower peak in the awesome oscillator, that's called divergence. And I usually label that a wave 5. So when I see that, then I'm thinking, well, maybe we are at the end of the trend and we're ready to turn around and move down in a correction. Sometimes you can have double divergence, triple divergence, where the market will make another new high. So you just have to gauge it, and you have to wait for some kind of confirmation before you take the trade. But this is the basic wavy tunnel setup, and this pattern shows up everywhere in every time frame. So this wave, it's the 34 EMA on the high, the low, and the close. That's what the wave is. Okay, they're moving averages. Now, when you have an 8-wave market cycle, there are various points along this 8-wave cycle where you would be buying or selling. So I just want to go through that. Trade number 1 would be buying for the wave 3. And you can buy on the retracement into the wave. You can buy once the market starts to show signs of strength. This is called a 1, 2, 3 reversal. So it's not the 1, 2, 3 that the other guy was talking about. This is a legitimate 1, 2, 3 reversal pattern where you have a market high, and then the market corrects. We label that point 1, and then the market, actually this took out that high, but let's pretend it didn't for now. This is actually the 1, 2, 3 continuation because it's during the trend. The 1, 2, 3 reversal happens down here at the end of the trend. This is the continuation where we label this the point 1. The market moves down. Actually, the market moves down. Okay, I'm confusing myself and I'm confusing you. The 1, 2, 3 reversal, I'm going to show you it afterwards in another chart. This is the end of the wave 1, the wave 2, and what you want to do is you draw a dotted line across the top of the wave 1 to get confirmation that the trend has changed, that the trend has reestablished itself, the uptrend has reestablished itself. It's a confirmation that the market is continuing to move up again. This is also called a 1, 2, 3 continuation pattern, but I don't want to confuse you because it's not the same as wave 1, wave 2. So you draw a line across the top of wave 1, and when the market takes that out, that's your continuation trade. So trade number 1, buy for the wave 3, which is usually the strongest move with very few retracements, and you can see that it's above the 12 EMA. The filter doesn't even come down to the wave or the filter. It's a strong trend, and you can look at that, by the way. If you just put moving averages, you can see how strong the trend is, how strong the move is. If the market is moving, keeps on coming back to the moving averages, any moving averages that you use, it's a sort of a weak trend. If it's not coming back so readily, then it's a stronger trend. We label this the wave 3. And then this is a wave 4, and this is trade number 2, buy for the wave 5 up. And then we have the wave A, the wave B, and we sell for the wave C down. And this is our trade number 4, buying the end of the wave C with a stop below. So let's just a little bit about Ralph Nelson Elliott, he studied various market indices over a 75-year period in the 1930s, and he discovered that stock markets traded in repetitive cycles. These cycles or waves reflected the emotions of investors, and that's how we get Elliott wave analysis. It's really from the emotions of investors. And wave 3 is the wave where most investors and traders get involved because it's the easiest wave to trade, for example. Okay. Fibonacci, Leonardo Fibonacci was an Italian mathematician born in the 12th century, and he is known to have discovered the Fibonacci sequence of numbers. And this Fibonacci sequence is a sequence of numbers after 0 and 1, where each successive number is the sum of the two previous numbers. So 144 is the sum of 89 plus 55. And when you take, and when you count the waves, this is called waveform. These are the numbers of waves that you're counting, all from the Fibonacci sequence. The corrective waves, 1, 3, 13, and 55, depending on how many waves within the waves you're counting. These are the Fibonacci sequence numbers. And then you add them up and you get other numbers from the Fibonacci sequence. So this is the complete market cycle. And when you get your Fibonacci retracements and your Fibonacci extensions, you're taking the Fibonacci numbers and you're dividing them by one another. So if we go back to here, and if we divide 34 by 55, we're going to get 0.618. If we take the inverse of that, 1 divided by 0.618, we will get the 1.618, which is the extension ratio, the projection ratio, when we're projecting the move in a trend. You'll also get that number by dividing 55 by 34, 89 by 55. You're getting the 1.618. So that's really all I'm going to talk about right now, just a little bit of the history. But this 8-wave market cycle is really great because you might recognize some chart patterns here, like the head and shoulders and the reverse head and shoulders. The end of every single swing move, you're going to see head and shoulders and reverse head and shoulders. So it's really kind of neat. Very, very neat. Okay. I mentioned the 1, 2, 3 reversal. So just quickly, because once we find our trigger, which I haven't even shown you yet, the next question that I get is, okay, so how do you enter the trade? So a 1, 2, 3 bottom is this, where 1 is the low on the visible chart. The market moves up, we label that a 2. The market moves down, we label that a 3. And then the market moves up. And this is a change in direction, change in trend. And this is where we can buy because we've taken out the previous high. And this is not to be confused with wave 1, wave 2, wave 3. The 1, 2, 3 bottom is just, it's a different nomenclature for a reversal of the trend. And then you see the 1, 2, 3 top as well. So this is a chart. This is a chart. And I just want to point out that when you combine the 1, 2, 3 reversal pattern with the awesome oscillator, i.e. you see the awesome oscillator divergence first, that's your clue that you can look for that 1, 2, 3 reversal pattern. So just a little simple strategy. Okay. And somebody's asking me, do you have a setup for the Forex market? Do you include harmonics with your strategies? Absolutely. We include harmonics. That's one of the several modules. That's the icing on the cake that we show. And what I've done in my program is I teach you Elliott wave analysis. I teach you Fibonacci. I teach you the Wavy Tunnel Pro strategy. And then I teach you harmonics. And the harmonics is the icing on the cake, all within the context of the Wavy Tunnel Pro. It's all within that context of the strategy. Also, when you're finding a top, you want to look for you want to look for candlestick patterns. This is an evening star reversal pattern. So you can even enter on the candlesticks, and you're always going to be looking left. Is there supply or resistance when looking left? In this case, there would be supply. And now support and resistance. I mixed it up here. I meant to say, is there support and resistance or demand and supply? Okay. Support and resistance is really what I learned about, but now you're going to see a lot of people talking about demand and supply. It really means the same thing. When you have a supply zone looking left, that's resistance. Okay, so I mixed up the terms. It's really support and resistance or supply. I didn't mix them up, but they're called two different things. And at the bottom of the market, it would be support or demand. Okay, so two different things meaning the same thing. Okay, so now let's get to the strategy. We're focusing on the breakout 4 trade after a big ABC correction. That's what we're focusing on. So we have a big ABC correction, and we're focusing on, it's called the breakout 4 trade. Okay, the end of the wave C, the end of the wave C at the tunnel. Now, this is the S&P, okay, and our indicators have dots. So the gray dot is our the gray dot or the gray arrow is our breakout 4 trade. This is the SPY. So the SPY had a gray dot really at the top of the move up. We had an A, B, C. At the top of this 3-wave move up, we had the gray dot. So this is when, and this is on the daily chart, the next time frame down, which is the 4-hour chart, would be a purple dot. So that is the end of a trend, okay, the end of a move. But I'm looking at this gray dot, the breakout 4 trade, and this is what our scanner shows us. So the SPY, I'm scanning on the S&P stocks, 500 stocks, and if I had the SPY in there, it would come up on the scanner. Now, this is the SPX 500 on a Forex chart, so I just wanted to show you what it looks like. We have the purple arrow down here. Somebody's mic is on. Could you please shut the mic off? Whoever's mic is on, thanks. You have the purple arrow down here, followed by the gray arrow. This is our breakout 4 chart trade. This was saying sell up here. Don't get too comfortable being long. And I'm going to show you just a few wave counts in just a minute to see what the context could be for this. Are we going to make a new low? Because there are many Elliotticians out there who are counting this as a move up, and we have a move down, and then we're going to start to move up again. So I'm going to show you that right here. It would be this kind of a count where from the top of the market, we had a nice 3-wave move down. This is called a complex correction, and we label complex corrections as, instead of ABCs, which I could call it for simplicity, but it's really not, we call it WXY. So WXY. And then I've seen many Elliotticians say, okay, this is the wave 1, we're in a wave 2, and we're going to move up for the wave 3, and we're off to the races in the S&P. My system said sell here, and it's not saying that it's not telling you that it's the end of the wave 1. It's not telling you that we're going to make a new low. It's telling you that we are going to have some kind of a move down, and it might be a correction. So a correction would be a correction of the move from this low to this high, or and we don't know how far down it's going to go. So it could be, any one of the Fibonacci retracement levels that you learned about today, 50%, 61.8, 78.6, even 38.2. So, but we do know that that this is a market reversal point and that we will see some kind of a move down. So if some of the Elliotticians out there are correct and we've made a wave 1 up and this is a wave 2 down, we will start turning around soon and take out these highs. The invalidation point is if we take out these lows. Okay, I'm going to show you the other wave count that's floating around, but my system doesn't care. Okay, the other wave count that's floating around is this, that we are still in this downward correction. So we have the W, X, Y, X, and we're going to be doing Z. W, X, Y, X, Z is a complex correction. So you can call it an ABC and then X, ABC, and then X, and then ABC. So if this is going to make a new low below here, then we are going to move down in 3 waves. 3 waves. And if we do move down and make a new low, we're not going to, I don't anticipate that we will go much lower than this, maybe 3,200 to 3,400 area. And then that will be the bottom. So either this is the bottom or we are going to make a new low. But I don't really care. Okay, that is the context. I know that there are 2 wave counts that I'm sort of following, but I'm really interested in my purple arrows and my gray arrows, because down here I got a purple arrow. Do you think I cared if we are going to move up and then come down again? No, I'm a trader first. I'm going to be buying down here and selling up here. Now let me show you something really, really fantastic. What does our scanner say? This is astonishing, so pay attention. The weekly scan showed buys on most stocks at this purple arrow. When the S&P was here, I'm going to show you all of the signals that came on the scanner to buy, like most stocks. Okay, many stocks out of 500. I don't know. I just looked at the first page, 30 to 40 stocks, and that's what I focused on. Here, and then I'm going to show you, I told you earlier that the weeklies showed strong buys here, and then the dailies in the last week showed strong sells here. So profit taking for the long positions. And that's what this shows. The daily scan, the weekly scan showed buys here, the daily scan showed sells here. Now I'm going to show you the ideal setups, the weekly buys. I'll show you the pictures. Okay, so this scanner, we have the scanners on Motive Wave, TradeStation, and MT4 for Forex. I'm going to show you all 3. This is the Motive Wave. And the Motive Wave, I told you why I looked at the weeklies, because the dailies weren't showing. We came down so much that the dailies weren't showing signals. Now on this Motive Wave, all this means is how many candles back. So very good means 1 candle back. It showed the signal, and you can really run this every day if you want, and you can run it on all different time frames. But that's what this column shows. And these are all of the symbols that came up. Okay, and I'm going to show you the charts and you'll see what I mean. So just get the pattern in your mind where we have an uptrend and then a strong ABC for the weekly. Okay, and now here come the charts. I don't have the arrows up yet because I just wanted to show you the divergence first. Okay, using the awesome oscillator. And the awesome oscillator, somebody asked, it's 534.5. Okay, that's the awesome oscillator. It's a MACD, a histogram, that's what it is. So you have the divergence here, you have divergence here. This is FCX, this is Facebook. You have divergence here where price makes a new high and the awesome oscillator doesn't. And then XLB. Okay, you have nice divergence there. Now look at the arrows. Okay, you have your gray arrow here. This came up on the scanner. This came up on the scanner. This came up on the scanner. Facebook came up on the scanner to buy on these weekly charts. So we have had a massive move down, and our scanner showed the buy on the weekly right that week. And I took a lot of these trades. We took a lot of these trades. And then the next question is, okay, well, how far up does it go? And I'm going to show you what happened with the daily charts in a minute. But these were the weeklies. Here were some more examples with the gray arrow. And these are Elliott Wave sequences. And these are calculated formula-driven scanners that show the end of this beautiful Elliott Wave pattern. Okay, using the wavy tunnel, using the semaphores, and this shows up on your charts too. So look at these gray arrows. The market just popped. Okay, and some stocks moved up more than others, obviously. Here's W Day, here's the rut. Okay, here's the rut. What a beautiful move that is. Here's eBay, here's Cisco. Okay, and then finally, here's Mara, here's DHI, here's DPZ, Domino's Pizza, and CWH. So these all showed up on the weekly scanner. Now I want to show you the daily scanner on TradeStation. Oh my gosh. Now I just printed this out yesterday, but I obviously saw it last week and the week before, and got blown away, because what this told me was, oh my gosh, the top 30 or so stocks, they're all red. I just don't remember that happening, and I think it's because all of the markets have been moving in unison. All of these stocks said sell. So all of these stocks had the breakout 4 signal on the daily charts. And I'm going to show you what you see here is you see the ready, and then you see the signal. We do have a signal already when you get the gray dot, and then the signal is when price moves above the moving average. We even have the entry price, the stop, and the 3 profit targets that you're going to want to follow. Okay. Now let me show you the weekly and the daily. This is Deere and Company. So down here, this is the weekly. We got the gray dot, because on TradeStation it's dots, not arrows. Right, on Motive Wave it's arrows, not dots. On MT4 it's arrows. Anyway, means the same thing. This is the gray dot on the weekly chart. So this was a buy, and the green arrow just shows the signal when we go above the 12 EMA. So it shows the signal, but you get alerted at the gray dot. Now look at, and 2 profit targets were hit. These green lines are Fibonacci based profit targets. Now look at the daily. We have a gray dot on top. So we had a downtrend where we get our purple, and then price moves up and we have the gray dot. It's saying if you're long, get out or go short. When everything lights up like that, you go short and you get out of longs. And you got your red arrow. We also have, I didn't take them off the charts. We have automatic trend lines that are drawn. So along with this red arrow, which signaled short on the breakout 4 trade, we also had this purple arrow, which signaled short on this trend line break. So we have trend line breaks at the same time but I can take them on or off the charts. So here's another example. GM, we had the weekly gray dot to go long. So what happens is you have this purple dot on top, right? That's the end of the trend. And then we have this very steep correction and we have our gray dot. And this is where the scanner says, okay, the weekly chart is going long. And then look what happens. The daily chart, after it hit the tunnel on the daily, produced a gray dot, and it says now it's time to get out of your longs and go short. Like this is crazy, just crazy. And here's another example where we had the gray dot, it moved up, and where does it stop? On the daily. It got a short trade on the daily when we got the gray dot on the daily. So this is an uptrend and a correction, and this is a downtrend and the correction. So this is treating this as a correction of this move up. And I realize that this could sound complicated. So that's why you need to have the training for this, where you really, really unpack the Elliott Wave analysis, the Fibonacci, and the harmonics, if you'd like the harmonics, using the wavy tunnel pro strategy. But this is one setup. Now somebody's asking me why we use the 12 EMA and not the 13, because the 13 is a true Fibonacci number. 12 is a square root of a Fibonacci number. We use 12, and that's it. You can use 13 as well. I'm not going to get fussy or fancy about it. You can even use, 8 if you want. So this is another example. And also we have the trend line breaks there as well. This is crazy, crazy. Now I want to just finish off with this, showing you the SPY and the QQQ, I think. So the SPY went long here. Okay, we had the move up, and then we had the steep correction, and the SPY went long here with this gray dot on the weekly. And where did it go short? Right here. I showed you this earlier when we got the gray dot on the daily. Is this crazy or what? So you go long here and you will be able to take your profits at these, different profit levels. But this is a confirmation that yes, you got the gray dot, you want to be out, and you might even want to go short. And then this is the QQQ, same pattern. So you had your gray dot on the weekly, and on the daily it said, okay, the market has moved up enough. We're going to breathe now. We're going to correct. We want to get out of our longs and maybe look to take some shorts. And you can use the 1, 2, 3 reversal to take your shorts. You can use a trend line break to take your shorts. You can use your candlesticks to take your shorts. You can use whatever it is that you use to trigger your trades. Okay. As long as you use proper money management, you'd want to leave your stop above the highs. So I'm getting really excited about this, and I'm looking forward to like the next week and the next week after that, because we have to go with the market flow. We as traders, we can have the context and sort of predict, but I like to go with what the market is telling me. I don't like to have a fixed view, like a fixed Elliott wave count. I really, really don't, because it's gotten me into trouble before, where I've just followed a wave count and it turned, if it turns out to be wrong or whatever, I don't like doing that. I like to follow the market flow. And that's why I love the wavy tunnel, because it is the market flow. So so I just showed you the motive wave and the trade station. I'm going to get to the MT4 now. For those of you that trade Forex, and I know that some of you might trade Forex here. So there are 6 wavy tunnel setups that can be found on the scanner. And there are 6 wavy tunnel setups that I created way back when. And these are them. The PW fill the gap, the breakout 1. Okay, there's a breakout 2 as well, but the scanner doesn't show that. The breakout 3 and the breakout 4. So the PW fill the gap is this right here, the price to wave and then fill the gap. It's the gap between the wave and the tunnel. That's the PW fill the gap. The breakout 1 is when the wave crosses the tunnel. It's usually the start of the wave 3 or inside the wave 1. It really doesn't matter. And then the breakout 3 is the wave 3 trades, the really strong trend trades. And then the breakout 4 is what we discussed today. And you have 2 breakout 4 trades that can set up here, one over here and one over here. And one thing that Elliott says, by the way, is when you have a correction like this, if you look left, it usually falls within the price territory of the previous wave 4. So that's just another thing that you can take a look at. For those of you just starting out, new to Elliott, you won't know what I'm talking about, but that's okay. Plus automatic trend line breaks. We have the automatic trend line breaks. So now I want to show you, well, there's the MT4 scanner. You know, there are lots of Forex pairs, and it's difficult to watch all the pairs unless you get alerted when there is a setup. And we have an alert system set up as well, which I will show you. And then you can go to the chart and take the trade if it meets your risk criteria. So this is what the scanner looks like. I printed this out not yesterday. This is a while ago, just to show you that on an MT4 platform, you don't only get the Forex pairs. These are all stock indices and bonds, the weekly, the daily, the 4-hour, and the 1-hour. And our funding program allows you to trade really anything. So you can trade all of these indices. And if bonds is your thing, you can trade bonds on the in the funding program it's an MT4 platform. And you can also set up the scanner to work down from the 4-hour, the 1-hour, the 15-minute, and the 5. You can do a day trading scanner with the 1 minute, the 5 minute, the 15-minute. You just can't put can't put everything on the scanner because of the bandwidth. It kind of screws things up. You want to be able to see whatever you're looking at on one screen. So these are the stock indices and the bonds, and this is the this gives you the ability to add your symbols. It gives you the ability to add your time frames. It gives you the ability. This is the breakout 1 trade. This is the breakout 4 trade, and there are a few things that you can change in here if you want to see it, if you don't want to see it. Do you want to see the trend lines? Do you want them on? Do you want them off? And we have all of these different trend lines. And then we have our alerts. Do you want to get alerted for the breakout 1 trades? Do you want to get alerted for all of these trend line breaks? So you have the capability of doing that. But of course, you really can't do that until you understand it inside and out. And that's what the training is all about. So I took this, I guess, yesterday. And I just this is the daily, the H4, and the H1. So you're looking at 3 different time frames, and you can see the breakout 1 trades here. And the breakout 1 is also, it serves a dual purpose. It serves as the end of trend trade as well, which is the PW trade. Excuse me. And then you have the breakout 4, which is what we just looked at. And then you have all of the trend line breaks, which I mentioned. So we're going to take a look at the Euro CAD now on the chart. And I looked at the Euro CAD and I saw that there were lots of interesting things here, such as the breakout 4 on the hourly and the 4-hour. And I also noticed that on the daily, the breakout 1, the end of trend was 7 candles ago. So I just want to I just want to show you, I would have preferred one candle ago or two candles ago, but I just want to show you for illustrative purposes what you can look for. And then we have the trend line breaks as well on the dailies. So we're starting with the daily. And when on the scanner, when this is a 1, it means that you have a purple arrow. When the breakout 1 is a 1, you have the purple arrow and you don't have any other candles after that. Now we also have the multi-time frame indicator here where this daily chart is in the middle row. Let me go to the next chart because it blows it up a little bit. The daily chart is in the middle row, and then the upper line is the one time frame higher, the weekly, and then the lower is okay. And then the lower is the 4 hour. So the time frames that we set up for the wavy tunnel are the 1 minute, the 5 minute, the 15 minute, the hourly, the 4 hour, the daily, and the weekly. So you can see that we have gray dots all sort of together. And this is one of my favorite trades. When I see gray dots lining up on 3 time frames, it means that I'm seeing this purple arrow on 3 consecutive time frames. And I'm looking for a reason to buy it or sell it, depending on if it's down here or above there. So that's one way to use the scanner. And if we just go to the 4 hour, that daily purple arrow showed up right here on the 4 hour chart. So that's where it showed up. And then look what happens. Price moves up, and then we get the gray arrow. Now the beautiful thing about these arrows is that you have opposites. So you have gray arrows above the wave in the tunnel, followed by gray arrows below the wave in the tunnel. So there's always an opposite. I mean, there's just so much to learn about this. And then you have your reds and your blues. Your blue dots are really great for the breakout 3 trades. Whenever we retrace into the wave, you want to be looking to sell. Anyway, let's move down now to the 1 hour. And way back here is when the 1 hour, the 4 hour, and the daily lined up for a buy. So had I seen it, 6 days ago, we wouldn't have had any of this price action following. And then you just work through it. You work through it. Is this the bottom? Well, let me tell you that when you see 3 consecutive time frames lining up, you can make the assumption that it's the bottom, but you have to leave your stop below the low because we can make another new low and you have to go in again. In this case, it didn't, it worked, but look at how the price action was sideways until for quite a number of hours until it finally took off, and then the wave starts to move up and starts to cross the tunnel, and then we move up to what? The purple arrow on top. And that's when we think, okay, maybe this is the end of the move. And that shows up as the breakout 4 trade up here on the 4 hour. So, and now this is interesting because now we've done a nice 3-wave move down and corrections move in 3s, and we get another gray arrow here on the hourly. So this is Forex, and you can choose any instruments that you want. I like to look at 3 different time frames: 1 minute, 5 minute, 15 minute for day trading, swing trading 1 hour, 4 hour daily, position takers 4 hour daily, weekly. Look at the scanner for the setups, and you will learn. We have a trading room. You will learn all the setups. Neil will drum them into you. I don't have time to play this video. This is Neil. Okay, this is Neil. Okay, Okay, he does a 15-minute video, so I'm not going to be able to play that for you, but maybe I will send it out to you so you can see what he does in the trading room during the London time frame from 8 to 9:30 London time, Mondays and Wednesdays, and also 8 to 9:30 New York times, Mondays and Wednesdays. And he has really mastered, like you're not going to find a better master of these setups than Neil. He can read any chart, tell you what to look for, where it's going, how to use the scanner, how to do these trade these setups. He's really remarkable. Why? Because he has worked with this day in and day out every day for the last 8 years. Is it 10 years already? No, longer than that. Yeah, it's more than 10 years that he's working with me. Okay, so let's just talk about joining the Wavy Tunnel Pro and getting funded. And I see I have 4 minutes. So it is like a master's training and understanding how the markets trade in cycles, but this is the real deal if you really want to learn Elliott and if you really want to learn a system which shows you how to count the waves without being a consummate Elliott wave counter. This is it. And our proprietary combination of cycle high and low indicators with momentum indicators to warn of market tops and bottoms. That's what I showed you with all of these semaphores, and our scanners are built off of these, and it's just so powerful. Learn how to track short-term and long-term trends with precision. It works with stocks, futures, ETFs, forex, and cryptocurrencies. It works for day swing and position trading, and find precise entry points for option strategies. Embrace the suite of professional tools to trade like a pro. And I'm starting for coaching September 18th. So the program is already in the website. You can get started today. And I would do that if I got started today and go through all of the videos and really go through it once. And then when you join me starting September 18th for 4 or 5 days, depending on which program you sign up for, we're going to be working together. And yes, we do help with putting the trade plan around the Forex strategy and how much are the wavy tunnel signals per month. No, it's not done like that. Yeah. So the 5-day accelerated trading and mentorship program starts September 18th. This is my flagship program. And you will have the opportunity to get funded as well. So we're inviting you to be a trader and not just someone who trades. This is for you if you're ready to learn a system that will help you consistently profit and will help you create a healthy mindset for trading. And that's key, healthy mindset for trading. And these are the rules of the funding program. You have to qualify and by generating 10% profit. Your daily loss limit is 2%. Your max drawdown is 5%. And then you get to share in 75% of the profits. But I wouldn't even steer you in this direction until you can show me that you're profitable before you even start the funding program. And that's really very, very key. So the value in this program is huge. It really is. You will get bonus access. We do charge monthly for the scanners, the wave counts, trade alerts, and trading rooms 4 times a week, various renewal plans from $59 a month. And the bonus is the funded account. And you won't pay these prices. I'm just going to get right to it. We're offering a $200 off discount. I know it's time now. You go to wavytunnelpro.com. That's the website. And you can sign up for any one of these programs, the starter, the pro, or the platinum. And the funding amounts vary. The starter is the 4-day and does not include the harmonics. The pro and the platinum include the harmonics. And this discount code will be good until Sunday, 200 off, capital O, capital F, capital F. And this program is really, it will change your trading lives because you will just, no matter what, if what you do in the future, you will I look at any chart and I just see the way I see what what the chart is going to be doing, because I've internalized the ways, I've internalized trends, corrections, and that's what most of our students say as well. And don't forget, tomorrow at 11 o'clock, I'm going to introduce Stephen, who created an unbelievable Elliott Wave software. And on Thursday, I'm going to introduce Juan, who runs our Elliott Wave desk. So both at 11 o'clock. Now, if you have any questions, you can contact me, Jody at fxtradersedge.com, or support at wavytunnelpro.com. And this is really my life's work that went into this program, and it has evolved over the last many, many years. I never change what I do, and it's just gotten better and better with the new scanners. It's just this is it. This is what I've longed for a very long time, and we finally have the scanners now that can just find the trades, and then and you just have to know how to, we teach you what to do, how to manage the trades.